It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another Friday and to the Real Estate Breakfast. Another episode with more property information as we connect you to the largest real estate property podcast across Australia. And we are doing that every morning, 7 days a week, streaming right now on Spotify and iHeartRadio. Gotta be feeling good. Yes, another Friday, August the 1st. This week has gone by super fast, as has the month of July. Goodbye, July. Let's hope that August is a good one. And good morning to you, Jackie in Perth. Thank you for your email about my coffee problems, my coffee machine problems. If you didn't hear, a couple of days ago I mentioned bought a second coffee machine from Breville and basically purchased a lemon. You said, Jackie, ditto regarding having problems trying to replace your Breville coffee machine because of bad pressure. You said you could relate to it. You are going to try a DeLonghi next time round. Sean, I got your email as well in Sydney. Same subject regarding the coffee machine. You said that sending the video is a real pain. You could relate to that. Very frustrating, and a brand switch is coming. You know good coffee when it tastes good, right? That's the first thing, and you know good pressure from bad pressure. Anyway, I'll let you know how that develops. Australia's property market, now it's roaring back into life. We've talked about this week 8 capital cities recording simultaneous house price growth for the first time in 4 years. That is according to Domain's June quarter house price report. Sydney is leading the charge, hitting new record highs for both houses and units. Let's welcome in this morning on a Friday, a brand new month, to Anthony Landahl, the Managing Director of Equilibria Finance. And good morning to you, Anthony. Welcome back to the Real Estate Breakfast. As I say, where's July gone? Brand new month.
Good morning. Great to be here. And indeed, where has July gone? And the housing market is coming back to life. And on the coffee, call me old school, but I still go to the coffee shop to get my coffee, so I avoid all of those hassles. There you go.
Well, that was me too, until COVID, and then we were in this lockdown situation. I thought, well, I better go and buy myself a coffee machine. Yeah, I still enjoy buying the coffee, but sometimes, man, some of those coffees that you buy from cafes are nowhere near as good as what you can produce from a home coffee machine when it's working well. Now, let's start on this national level, this housing affordability, which has become this serious challenge Australian-wide and a major problem.
It is. I mean, this Domain reports provides some data that we probably all intuitively knew, but the market is gaining momentum. Nationally, we now have 5 of the 8 capital cities with a median house price of over $1 million. We've got Sydney leading the way with a median house price of $1.7 million. That is double the median unit price, and we'll get into Sydney in a bit more depth shortly. We've now got Perth at 950,000 coming up to $1 million, but Canberra, Adelaide, Brisbane, Melbourne are all now over $1 million for their median house price. Perth, as I said, at 950. The market is coming back to life. That's making it incredibly unaffordable and difficult for a lot of people to get into the market. Adelaide's growth over the last 12 months, 11.5% in houses. Perth around 10%. They led the charge. Units not far behind. Brisbane's unit growth last 12 months, 13.3%, as people are finding houses less affordable, starting to gravitate towards units. Perth unit growth 14%, Adelaide 13%. Some really strong stuff across the board.
Yeah, and, coming back to Sydney, that 1.7, that is up 4%, 68,000 over the year to June. And those unit prices, as you say, they are rising all the time, 834 grand, the median price at the moment. As we look at Sydney, where are we seeing the strongest growth in house prices? And what do you think fundamentally is behind this problem?
In terms of Sydney market, house prices are soaring in some of the western areas where houses are more affordable in terms of the factors behind that. Still incredibly challenging for buyers. The strongest house growth was in the southwest region. That was up 10%. That's taken the median house price in southwestern Sydney to $1.2 million. Parramatta was 8.8% with its median house price now at $1.45 million. Outer Western Blue Mountains, median house price of over $1 million with growth of 8.1%. So those areas that maybe people were gravitating to 12, 18 months ago, 2 years ago, their growth's been incredibly strong. That southwest, the western suburbs, the lower Blue Mountains, with their median house prices all now over $1 million. Units of a similar trend. The outer southwest unit prices, the median price says $570,000, a much more affordable entry point and price point. And we've seen growth around 7% in unit prices in that southwestern area. We're seeing a lot of those areas, those more affordable units. Parramatta's median unit price, $595,000. Southwest Sydney, $500,000. Central Coast, $600,000. So some of those areas, the units are much more affordable in Sydney. The median price in the eastern suburbs is $3.6 million. North Sydney and Hornsby, $3,060,000. And the Northern Beaches' median house price is now $2.7 million. So those markets, very, very difficult for people to get into.
Yeah, it's a lot of money. And I recall a couple of years ago when we were talking about some of these markets hitting very close to 3 million, and now in these desirable areas around Sydney, as you say, as they are well over the $3 million mark. I just want to come back to the fact that because it is the 1st of August, how's the sentiment at the moment? Because you're in the mortgage broking game. How are people actually feeling as we head into August of 2025? What's the gut telling you?
Yeah, there's definitely a shift in sentiment. A lot of buyers were sitting on the fence. A lot of buyers were getting pre-approvals. Buyers are now doing things. Buyers are sensing there's an opportunity to get in the market. The rate cut in February, we've had the subsequent rate cut in May. We've got good, strong inflationary data pointing to another rate cut in August.
We are talking to Anthony Landahl. When we come back, we'll just talk a little bit more about these units and the way that there is a rebound going on, and look at market momentum. We'll do that after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it is time to go to Melbourne and back into Doncaster to Alec, who we were talking to recently. And Alec, you've got a property tip for everybody this morning.
Yes, I do, Craig. So the biggest thing which I notice when you're analysing sort of development sites and good investments are the killers. So the killers that I have noticed are the land tax, if you're in Victoria particularly, the build costs, which are very, very high at the moment, and the interest rates, where if you've got a 2-3 year construction loan, it can end up costing you $200,000-$300,000 in interest, which completely eats into your profit margin. How I would overcome that is, instead of building 3-4 townhouses, which may take you, 2-3 years of construction loan interest, and then keeping one which you're paying capital gains tax, you're paying land tax on, your property management fees, I would sort of scrap all of that. And in that same 3 to 4 year period, I would end up managing to build 2 different single dwelling houses, sell both of them in the meantime, so you're not keeping them. You're turning over at least $1.5 to $2 million profit in that time. And you're not paying a high construction loan because it's only to one dwelling. You're not paying a lot of tax because you're not keeping anything. And overall, it's a much simpler, straightforward process because you don't have to go through council typically as much as what you would with multiple dwellings.
It's the Real Estate Podcast.
Let's go to you, Lillian, because the Fitch report that came out at the beginning of June is still causing a little bit of a stir. Fitch is an American credit rating agency, and the report said that up to 210,000 homes would be delivered in 2025-26, and prices could fall, Lillian, approximately by 15%. Good morning.
Good morning, Craig. What a headline. I wanted to touch back on this because I have had a few clients, particularly from overseas, asking about how accurate the predictions are. Firstly, I'd like to make it very clear that, this headline saying that the Dubai market is going to crash by 15% is actually quite misleading. Let's talk first about supply and delivery. Yes, there are a lot of homes that are due to be handed over this year and next, but in Dubai, only about 56% of projects ever reach handover on time. So what this realistically means is that the number quoted of 210,000 homes handing over will actually be closer to about 120,000. The other thing is that post the Trump tariffs, we're seeing delays and difficulties getting materials like steel and concrete. So this construction cost inflation will also further push handovers past their actual date that they're supposed to come over.
Know Your Property. Available for breakfast from 6 a.m.
And Anthony Landahl, our mortgage guru, is with us on the 1st of August. And I want to just sort of come back to the units, Anthony. I know that they have rebounded. You want to talk about what is fueling their rise and how they sort of stack up at the moment compared to houses.
Yeah, we're definitely seeing an uplift in activity and purchasing activity with units, essentially because they're more affordable. That's the bottom line. A lot of people are being priced out of actually being able to buy a house, particularly first home buyers, where units, more affordable touch point, more affordable entry point into the market. We're even seeing that with some investors now gravitating maybe towards units. Interest rates are coming down. Investors are looking at places to now reinvest their money rather than in cash. They're coming back into property. So we're seeing units attractive to both first home buyers as well as investors coming back into the market. That is creating more activity, and that is why we're seeing a lot more buoyancy in the unit market at the moment in Sydney.
Let's talk about momentum and the driving force with the latest data and some of the key takeaways for people on our Friday morning.
Some of the key takeaways is that we are getting momentum in the market. If you're a buyer, make sure you understand your borrowing capacity, because people's borrowing capacity is increasing. What people are able to buy is more than what they might have been able to do 12 months ago because rates are coming down. Understand your borrowing capacity, understand your repayments and what you're comfortable with. So work with your mortgage broker on getting your strategy in place, getting your pre-approval in place, and be ready to buy, be ready to put an offer in, be ready to action something, because there is increasing momentum in the market. With that'll bring increased competition. But there is a little bit of opportunity now before the market fully picks up and before spring to maybe capture a property that maybe you couldn't get 6 or 12 months ago.
Yeah, spring, bring it on. We're looking forward to that, as we are looking forward to, well, I was going to say sort of closing the year out, but I better not say that. We're only in August. Anthony, great to catch up with you this morning. Enjoy the upcoming weekend. Really good to hear about the sentiment and particularly your comments coming from the mortgage space. And look forward to catching you back in a couple of weeks' time.
No worries at all. Enjoy the rest of the week and your weekend, and we'll catch up soon.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
Bought a 3-bedroom townhouse on the Gold Coast with a loan. I purchased it on my own and without the help of mum and dad, the bank. And then a few years later, I sold that property and I purchased another property, a 4-bedroom house in the Gold Coast without the help of anyone else.
Gee, lots of commitment. Now, I want you to make everybody cry into their cornies this morning having breakfast, because I want to go back to that first property when you were 21. I know this firsthand because the Gold Coast market was such a different market. The amount of units that were available and extremely cheap.
I think it was $220,000 from the top of my mind, and it was a 3-bedroom townhouse. It was great value, but back then people thought that was expensive, but a few years later it doubled in price. So it was good to get in the market, and right now it is very hard, especially for first home buyers, to get in the market in the Gold Coast.
We connect you to the best real estate information across Australia. The Real Estate Podcast.